Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. What a difference a week makes. Last week prices were once again, after forming a small V-bottom, hovering around the middle time of the June to November 2020 bullish shift pitch for currently 134.10. The difference this time was misdirection. Friday 2 weeks ago was a classic key reversal down and bearish engulfing pattern combination right at the top of the recent V bottom as well. However, there was no follow through. Instead, the following Monday saw a bullish harami, which was followed on Tuesday by a bullish opening white Mariposa. Now admittedly, last Wednesday was a break from the bullishness with an indecisive spinning top, even though the market was higher. But I may refer you to my very final piece of my commentary from 5 weeks ago, something that I have quoted since that time, and here it goes. However, over all of this, unless otherwise proven, the gently rising bullish shift pitchforks, specifically both middle tines, are the bullish incentive, end of quote. Now this refers to the already mentioned middle tine of the June to November 2020 bullish shift pitchfork and the one above it, the middle tine of the October 2019 to February 2020 bullish shift pitchfork, currently at 138.05. These, after all of their time of their duration, are still showing the bullish incentive, such that last Thursday saw a key reversal up, which set off the rocket skywards. Friday we closed over the second, higher, middle tine. Today we are racing up to test the overhead neckline of the 2020 to date, yes, it is that big, 2020 to date reverse head and shoulders pattern, currently at 144.55. In all this commotion, the market has created on one thing of possibly supreme importance. This rally up from the V bottom lows, the market is set to make a monthly key reversal. And that's with a week still to go. So if we close on Friday night over 137.5, then we will have a monthly key reversal up. That's something to definitely watch for. London coffee. The peak of the market 9 weeks ago was all part of a false break higher from the sideways triangle pattern that we've seen since summer 2020. The downtrend of this pattern, currently at 14.05, was made up from broken September 20 to date downtrend, whilst the uptrend of the pattern is the still relatively solid October 2020 to date uptrend, currently at 13.62. And that's been partnered since December by the long moving average, currently 13.65. It's a formidable looking combination. Last week I added a finesse to this pattern, two parallels, one to the downtrend and one to the uptrend. The uptrend has a late January to date uptrend, currently at 13.62. Both are only 2 pointers, but aesthetically we have an early March to date downtrend also at 14.12. Aesthetically they are pleasing. So overall, that's where we were last week, back within the same sideways triangle. This doesn't mean that we have seen the last of the false breaks, but this week looks like it may be the genuine article. It didn't start last Monday, but last Tuesday instead, with a key reversal up and bullish engulfing pattern. Just. Last Wednesday was a dragonfly doji, and the Thursday was a bullish engulfing pattern. Not that hard, and ask if the previous session is a dragonfly doji. Anyway. More importantly, that session had a close back up over the broken downtrend from September last year and the more recent March based downtrend. Then today prices shot higher, basically through no man's land, to punch up through the first of 2 July 2019 to date reverse head and shoulders pattern. That's currently at 14.38, and to halt at the 50% Fibonacci of the big October 2018 to April 2020 move at 14.50. This level had capped an earlier move higher back in November 2020. Now it is really too early to start looking at topside targets. It really is. However, since I will not speak to you for a week, I think I might lay out some topside levels just in case. First level to look for is the 50% Fibonacci line from May 2018 to April 2020 at 1477. This halted the rise back in late February and should not be underestimated. Next is the connected tops from November 2020 to February 2021. They may cause the market to form a bull channel based on them, so watch out for that. Target X on the top side is the preliminary potential target for the large sideways triangle. I also have a target X1 off the chart, which is the full potential target for the sideways triangle. All these depend on a continuation of the current break higher out of the sideways triangle, which, as I've said, is not yet confirmed. Thank you for listening. This weekly broadcast gives you the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.